Kranthi Bathini is the Director of Equity Strategy at Wealth Mills Securities. Good to have you, Kranthi, on the show. Thank you very much for your time. How do you look at Swiggy's open in the market? Second day on the trot, doing well?
Tanvir, good morning to you. Yeah, Swiggy definitely surprised the street. And the listing gains, definitely the company is good able to sustain the listing gains. Of course, Tanvir, the retail interest for Swiggy was lukewarm. But the issue has been good able to thrive through, and we can see some kind of good listing gains. There is a mixed reaction from the brokerage and research houses. Some brokerage houses like Macquarie have downgraded the stock, but there are some domestic institutional research houses have upgraded the stock. So there is a complete dichotomy. But on the street, the stock would able to sustain the listing gains, given the kind of business model and also the strong network they built in India as the quick service and the food delivery grocery business is concerned. These business models are new and they're futuristic in nature. But given the kind of digitalization that's taking place in India, the kind of opportunity these businesses throws, these businesses are very interesting to look forward.
I understand that. I just want to get a sense on how would you stack this IPO versus some of the other cash burn businesses which have come to the markets. Essentially at a time when you're looking at peak valuations, does it get justified?
In terms of the valuations is concerned, because it is a duopoly business at this point of time, and these businesses, once they come to the public market, once they get listed on the secondary market, they learn in a hard way to make profitable and increase their key productive measures and the profitability indicators. That's how we witnessed in Zomato. Once the stock got listed, the stock had a roller coaster ride, and they acquired a quick service, quick business, quick commerce business, Blinkit. When the company acquired this business, the market reacted very a negative way. And from there onwards, the company could able to become profitable. And what we witnessed for Zomato is more than 200% gains from its low. So Swiggy is concerned, still, as you rightly mentioned, still it has had to break even, had to make profits. But given the kind of outlook for India is concerned, and also the digitalization that is taking place in India, these companies have to increase their keep KPIs, keep product indicators over a period of time, and increase their productivity and profitability. Once they are profitable, we can see some heightened activity in these business models.
Kranthi, does a series of big bang IPOs get you worried about where we are in the market cycle and the fact that the primary markets activity being so brisk could signal a top for equities? One of the reasons why the market has been selling off the last 1 month.
Yeah, we have witnessing an exodus of funds from Indian markets, and foreign portfolio investors withdrawn from India for more than a tune of around 15 to 17 billion dollars. But market could able to absorb all these IPOs. That can show the strength of Indian markets. A couple of decades back, when these kind of exodus takes place from Indian market, the market used to shake. Right now, what we are pursuing on Indian markets is just a technical adjustment and also the consolidation. Now, what we can sense on Indian markets is market is more mature. The DAs, the domestic institutionals could able to absorb this kind of selling, and also the retail could able to participate in all the IPOs. During the past financial year, more than around $17 billion have been raised in primary markets itself. So we can see the sense of optimism on Indian market. Relatively longer term basis, definitely India is a place to chip in. That is the reason everybody participating in these kind of new age business models. And Tanvir, the list of new IPOs that hit the market the recent 1 year, these are all new different business models. That's where it's driving the interest of investors.
Indeed. Where do you see the Nifty return for the next few years? I mean, how much do you think the market would return on an annual basis to investors as the currency weakens?
Yeah, that's and in terms of the CPI is concerned, the inflation is one of the area we need to watch for. Once the inflation pulls off to the comfort level of RBI, we can see some kind of relative rate cuts on Indian markets. Once that rate cuts do happens, we can see some kind of uptick in the growth, but we don't see any kind of downtrend in terms of the growth is concerned. Well, still we stick to our target of next couple of years target of Nifty at 30,000. That's what I mentioned in our last interaction. So right now, what we witnessed is some kind of healthy technical adjustments on Indian markets,
Sure.
but we stick to the earlier target.
Fair enough, Kranthi. Thank you very much for joining us with your take on the Indian market.